Hello and welcome. My name is Thorsten. I'm the founder of Dividend Stocks Cash Stock Screener to make long-term profit growth visible. This helps you, and it is the only way for you to achieve capital gains and growing dividends in the long run if the company knows to grow its profits. In this video, we take a look at tobacco industry, give you a brief overview of the different tobacco stocks we have. And I think that the tobacco industry or tobacco companies are very interesting, especially, of course, for dividend investors. And to start with the overview, we have the MSCI World Tobacco Index. It's comprised of 6 tobacco stocks. With the exemption of a Swedish match, I think all tobacco stocks are well known, especially Japan Tobacco. We all have these stocks in the screener and take a look at the metrics of each of these stocks. And what makes it very interesting, these tobacco stocks, is the long-term performance. In the long run, starting in 2004, we see a clear outperformance of the tobacco stocks or the tobacco index compared to the MSCI World. We also see price decline starting in 2017 of the tobacco stocks and recovery which just started and hopefully will last. That's to give you a first overview, and then we go into the screener. I will make it try to make it very briefly, because if I really start to analyze and lose myself in analysis of each stock, then we can stay here for hours and the video would be much too long. So first we look at the tobacco stocks. I created a little watch list. Here you find the tobacco stocks again, which are included in the index. Then we change the ranking to dividend income, because I think that investors especially interested in tobacco stocks are investors requiring high dividend yield, but also sustainable profit growth. And this is quantified by operating cash flow growth, stable operating cash flow growth, and stable revenue growth. Dividend yield at least 3%, also growing at least 5%, and also stable dividend history. Also take into account this valuation and the debt situation here. And if we apply, or after applying this dividend income ranking, then we see that the calculated scores are very high, mostly very high, and still high for Swedish match. Sorting by market capitalization in descending order, we see that the largest stocks are the American stocks, followed by British American Tobacco, Japan Tobacco, Imperial Brands, and Swedish match. Then we select in descending order by the dividend yield. Highest dividends on top. The highest dividend is Imperial Brands with more than 7%. The other dividend stocks, the other tobacco stocks, also dividend stocks of course, have yields starting from 5% at least. Swedish match pays only 2% dividend yield. Based on regular dividends. They also pay special dividends starting in 2016, which makes the dividend a little bit higher. I think about 3 to 3.5%. If we look at market capitalization, and the pure fact that Swedish match is from Sweden makes it less interesting tobacco stock than most other stocks, I guess, at least. Then we continue our way to the dividend related metrics. We see that the payout ratios in general are okay. They are rather high, but high payout ratios in the tobacco industry are normal, because most of the profits can be paid as dividends without problems, without deteriorating the future situation of the company. Tobacco industry in general does not require very high reinvestments. Maybe because the industry is in a transition mode right now, a little bit more reinvestments than usual, because next generation products need to be created, and there needs to be done a little bit more marketing than usual. But in general, I think it's still true that most of the profits can be paid as dividends. In general, the old tobacco products are in decline, at least quantified by pure numbers sold, but thanks to price increases, the tobacco stocks or tobacco companies are still able to increase revenues and profits as well. So I think in general that the tobacco industry has a future. We can have here the years of dividend increase. Yeah, you must take into account that the British American Tobacco, for example, has a 0 years of dividend because of the technical dividend cut. They changed their dividend payment rhythm in 2017, which makes the dividends in 2017 or made the dividends in 2017 extraordinarily high. So that 2018 it looked like a dividend cut. In fact, it is a dividend cut technically seen because in 2017 you received more dividends than in 2018 if you calculate or if you aggregate the dividends based on the ex-date of the given year. So this needs to be taken into account, and in Japan Tobacco as well, this also has a technical dividend cut, this time due to change of the business year. In general, I don't rely on these metrics, although they are very popular. I prefer the stability matrix in this case, like this dividend stability, because these dividend increase matrix, they always reset after something like this happened, and dividend stability always takes into account the dividends of the last years. And here you see that all companies increase dividends very stable and very reliably. The increase rates are also nice, with a double-digit 2 times within the last 5 years. Of course, always take into account that the compound annual growth rates respect only 2 years or 2 data points, the start and the end, and then the averages are calculated based on these 2 points. So you must always have a look if there is some peak or if it's going down extraordinarily, then the compound annual growth rates are not useful. In general, the higher the stability, the better you can use annual growth rates. In general, don't rely on metrics only, because these pictures are very speaking, and they always show you if metrics should be taken into account or not. So from a dividend perspective, I think the tobacco stocks look very interesting. Is it the same for the profit? In the profit perspective, in general, I say yes, because we have here stability of earnings and of cash flows, and we see that they are also very, very high. In general, we only have 2 examples of moderate metrics or results. One time is Imperial Brands and one time is Altria regarding the cash flows. In general, we have some problems in the tobacco industry, or challenges. If you do a fundamental analysis, one thing is that we have a lot of spin-offs and mergers in the tobacco industry. British American Tobacco, for example, merged with Reynolds, and Altria and Philip Morris, they have a lot of spin-offs. Philip Morris is a spin-off of Altria, and both of these companies had spin-offs on their own regarding Kraft and Mondelez. And all these spin-offs, they make it hard to create a proper fundamental history of the stocks. But we did our best by manual adjustments, for example. If we take a look at Altria, then you see that we adjusted the metrics for Altria regarding dividends and also cash flows and earnings, for example. But you must be aware of this, that this is a general problem. Another problem is related to revenues, because we have 2 kinds of revenues which are very different in the tobacco industry. It's total sales versus net sales. Total sales take into account the taxes, which are very high in the tobacco industry. Net sales exclude these changes. And often investors compare one stock with the other stock, and one time they have the net sales, and one time they have the total sales. And depending what you take, also margins differ very much. Where did we stop here? I think with earnings and cash flow stability. And here we see that in general we have a very reliable cash flow and earnings growth, which makes it the tobacco industry very well. Going next to the valuation, I suggest, and then we see that regarding valuation, we have undervalued stocks here in the tobacco industry. Only Swedish Match seems to be highly priced, but all other stocks seem to be clearly undervalued, especially compared on or based on operating cash flows and historic dividends as well. Also compared on earnings or based on earnings. And that's the result of the price decline, of the recent price decline we have seen. For example, if we take a look at the British American tobacco, then we see here in the long run nice capital gains, and then here we see the price drop, which is considerably, and makes the stock look like a bargain right now. The stock price was as high as 55 British pound and dropped to 24.63, less than a half, and now it recovered a little bit to 30.90 British pound. But if we look at the fair values, better here in the current business year because of an outlier in operating cash flow, we see that the fair value is between 46 and 50 British pound compared to 31 British pound today. And this is clear undervaluation, at least based on these metrics. We also see historically high dividends, 6.4%. Some time before you got a 4% dividend yield, and now 6.4%. So that makes it very attractive for dividend investors if you believe in the future of the tobacco industry. In general, I have this belief, and that's why I made this video, because I think that tobacco stocks can be very interesting for dividend income investors. Of course, you need to make the decisions and the stock picking yourself. You need to dig a little bit deeper, but that was just a superficially, I admit, but it was a superficial look on the tobacco industry just to give you an idea about the current situation. That's Thorsten from Dividend Stocks Cash. Thanks a lot for watching. See you next time. Bye bye.